Well, hello everyone, and welcome back to episode 127 of Man and Machine. Here with the PeakBot co-founders, myself and Ben, and Mark Phillips from Harvested Financial. Mark, how you doing this morning?
Good morning. Good morning. Well, I'm watching a 3% futures open. Been a minute since we had that.
Yeah, feels like brand new territory for us. Very exciting. We've got a lot to talk through today. We have some new segments. We're going to be doing shifting the Let's Learn Something. We're going to take a closer look at PeakBot's automated strategies that we're building in tandem with Mark and Harvested to utilize for you, the everyday retail trader. Today, we're going to take a closer look at our King Condor strategy, which has become the new favorite. Wheel who? Sorry, Wheel. Old news. So we'll talk about the King Condor and the impact on the time of entry for this trade today. Not only that, we'll be taking a look at stocks in real life. Ben's got a favorite that we'll be talking about today, and many more things. So let's talk about this market. Open pre-market, you said what, 3% or up 3 points in futures. How are we looking? What do we think the impact of this is? Just another Monday. What are your guys' thoughts?
Well, I will say that going into the weekend, I like to obviously take a look at all the events that are supposed to be happening over the weekend and happening over Monday morning. And I gotta say, I don't think I saw anything that I thought would move the markets like they have moved over the weekend, but that's the nature of the beast, right? Yeah, so unfortunately, anybody holding condors over the weekend probably got blown out. King Condor definitely got blown out, and we still love the strategy, but it is, of course, exposed to large movements like this. Yeah, I don't know. My thoughts are, hey, things are unpredictable. Make sure you're hedged.
That's right. Mark, any thoughts from, exiting last week, coming into this one, and anything that could cause this nuttiness so far this morning, or just?
I think I believe the president claimed both responsibility for negotiating a ceasefire between India and Pakistan, as well as a trade deal with China. So that's why we're seeing names like Apple up. I think Apple was up 7% at one point this morning. Maybe it's faded a little bit, but I think China is the big thing driving this. And that's just the way I've been treating this market recently, that it's, there's a lot of uncertainty, both to the upside and downside. And I think vol comes in both directions. So, if you're going to put on a short vol trade in this market, you've got to be very particular about when you're going to do it, as we'll detail later with King Condor. But as Ben said, like at the end of the day, uncertainty is out there. You're going to have to take some L's. So, there's no trading strategy that's going to take into account a 3% overnight futures move. That's a big one. That's out there in the standard deviations.
Yeah. Yep. That's why it's key to diversify your portfolio. Be trading as many different strategies as you can. Not financial advice, but that's certainly the approach we take here at PeakBot, and take a step further to automate them. So let's get into it really quickly. If we want to give high-level PeakBot picks, very high level. Thomas took W last week, but Ben and Thomas both went 3 for 3. As a team, we went 8 for 9. What's that, like 88%? Something like that.
Along those lines, yeah.
So 8 for 9 as a team. I ended up being the loser. I was bearish on NEE, Next Era Energy, and it got completely blown out. But this week I got 1 put spread and 2 call spreads. I'm bullish on CVS, bearish on Exxon, and bearish on Comcast. Boy, do I love being bearish on Comcast after going to college out in northeastern PA for 4 years. I hate Comcast. So anyway, those are my PeakBot picks this week. I'm hoping for a green week. Ben, what's your action this week quickly, and then we can get into some more stuff.
So let's real quick just take a look. Give me 1 second. My
Take your time.
Spreadsheet, of course, isn't loading now. So last week I did go 3 for 3. I traded 3 put credit spreads. Again, short term, trend is my friend. We've been bullish. The market's been bullish since the beginning of April. So short-term bullish, longer-term bearish looking. So trading with caution currently. But I went 3 for 3 on CVS, GLD, and Robinhood. wound up taking profit early, taking that risk off the table. I made a total of a 15% gain last week on my transfer plate. It's weeks like last week, week before, where it's like, man, why did I put more cash into the strategy? Of course, I'll say that on losing weeks, because that thought could come back to bite you. So this week, I've only got 2 positions. I'm trading GLD again, and then ticker PDD. And I've got spreads on both of those, put credit spreads on both of those, gearing up for about an 18.5% return.
Love that. Very cool. And I love your approach as of late with PeakBot picks, where you're gonna, if you're gonna be manually placing the trend spread picks as of right now with the volatility in the market, you're gonna let those orders fill, because I see that the last few weeks you'll put in an order, and if it doesn't fill, you're not taking it. You're happy to only take 2 trades that week. It wasn't meant to be. So good approach, like that. Very cool. All right, and then we don't need to go over Thomas's picks because I'm sick of him winning, but I think he's got 3 call credit spreads this week, so we'll see how he does. Not the right start for him this morning, but all right, stocks in real life.
Let's do it.
All right, so today's a good one. We joke about this. Oh, by the way, really quick, Doug, so sorry, man. Good morning, Doug. Happy New Week.
Doug's back.
To you. Did we miss him for a week or two? Did he tell us he was traveling? I forget.
I think so.
Okay, well, good to see you, Doug. Stocks in real life. Ford. Ben, I don't have to question this this tagline today. Built Ford tough. I know that. That's ingrained. I've heard that before.
Yeah.
Forever.
Yeah. What's your favorite Ford commercial? Do you have one?
I don't know. If you were to ask me my favorite Geico commercial or Progressive an insurance commercial, I can pull one. I don't know a Ford commercial. Do you have a favorite?
I like the one where, and I don't even, truthfully, I don't even know if it's a Ford commercial.
Okay.
But there's a commercial for a truck where there's just a bunch of like burly men carrying the tailgate of their trucks, and they're like all like convening on a mountain together, and then there's just like this one truck at the top of the mountain. I'm pretty sure it's a Ford commercial.
Okay. All right.
But that's like when I think of Ford on TV, that's what comes to mind.
They did have some ridiculous, this is dating back, and I'm just looking now, like the 1980s Ford F-150 commercials. Like they would get more and more ridiculous with the amount of things that the trucks can tow or pull. And I do remember those types of commercials. Mark, before we get into everything, our thoughts on Ford as a business, as a manufacturer?
Don't know much about them. Don't know much about their vehicles other than the F-150, I think is the most popular car in America. But not that much experience trading them. It's one of I tend to get clients that, want a name like this for its relative consistency and, the dividends. But I look at a name like this and I see American manufacturing and the path that's on. So personally, I have a hard time trading something like this.
Totally get it.
Yeah.
Totally get it. While we take a closer look at the stock, Ben will tell his funny story with Ford, or at least the scenario in which he uses Ford to trade. Any guesses on the IPO? This is a fun one because it's been around.
Oh man, IPO on Ford.
I mean,
I'm gonna say 1922.
Yeah, exactly. Maybe it's a little later than that. Maybe it's closer to the 34.
Okay. So based off of getting the same date 3 different times here, we're seeing 1956, January 18th, wow. 1956. There were 10.2 million shares of Class A shares offered. Price per share at $64.50. So that's interesting. Initial market cap over 3.2 billion back in 1956. Whatever that meant.
It was Goldman has a whole little article on their website about this. It was the largest stock offering to date at the time.
And they were the leading investment bank behind it. Yep. Wow. Okay.
All right.
So been around a good while. Ben, why don't you tell these people? First of all, any of us ever owned a Ford? I don't think I've ever owned a Ford. My dad owned Ford minivans for a
Nope.
while. My dad was whatever I don't know. I can't think of the Ford minivan, but he had that for years growing up with
The Windstar.
Oh yeah. Ford Windstar. You nailed that. Yeah, every color of a Ford Windstar my dad had, and I think he got made fun of for having a minivan. But you could play any sport on mankind.
Doug was riding around in an electric Mustang over the weekend.
Whoa!
I'm curious to hear Doug's experience. He's back from his gig in Vegas, and he had Jensen on stage.
Oh, Doug, what are you doing?
If you want to hop on and tell a story, let us know. We'll send you a link.
I'd love to know. Wonder what kind of event this was. But okay, very cool. All right, so iconic ticker symbol F. Not messing that up. They've grabbed it. It's theirs forever. Mark touched on this earlier. One of the I say this. I actually haven't looked at the full history of Ford's chart, but been around a while. Has been relatively consistent. But I'll tell you this. I'm looking at the chart right now. Ever since we've come off of the COVID highs and kind of the crash back down, if you want to call it, very choppy. I mean, the stock has traded over the last 3 years anywhere from the $8.50 range up to about $14 a share seems to be the resistance at the top here. And I'm going all the way back to falling back down out of 2022. As you can see there, it's really, and then even more so over the last just about a year, it's even an even tighter range, somewhere between, we'd say $9 and about $11. So tough to read. Yeah, Ben, tell them your story about this stock.
So Ford, and I don't know why I landed on Ford, but for whatever reason, I do a lot of testing with our bots and with I need to have things in my portfolio so that way if I have nothing else in there, something is in there. So no matter what the brokerage is, no matter what bot we're testing, no matter what's going on, I'm almost always carrying at least one share of Ford. Again, I don't know why.
It's your test.
That's just I think it's the fact that it's a single letter ticker. And my pointer finger just happens to fall on F on my keyboard, so it's just the fastest. It's the fastest ticker I can get.
Plus, your downside is limited due to the fact that it's a cheaper stock. You feel bullish on. I think you've said this jokingly. It's hey, what's worst case scenario? Ford drops to $1 because it hasn't done that, or $2 because it hasn't done that in 10 years.
I was just going to say, for all, if you're thinking that Ford can't go to zero, in 2009, it basically went to zero. So you were down 95% in a year on that, I think, in 2009.
You know what's wild too? I didn't even realize that. I'm looking at pre-COVID here. Actually looks like the start of COVID, March of 2020. Stock was trading under $4 a share, almost $3 a share. Wild. Geez, that was fun to hold it in. What was the highest it got up to in COVID? It looked like it blipped right around $20 a share. So
or 26, right around 26. So we swung from $4 to $26.
Were that many more cars manufactured? That was just pumped COVID, I guess. But
well, there's the used car demand thing that there was a massive demand for used cars in 2021, 2022. So the automakers boomed on that.
Point.
Doug mentioned something interesting because I don't trade Ford options because of this. Last time I looked at Ford, they were paying dividend by splitting the stock fractionally. It was a pain for options trading. Yes, the strike prices on Ford are, I guess they're sorted now, but I remember for a while they were on 0.85, the 85 cents into the dollar. I remember that being a real pain, and I didn't like it.
I gotta tell you, normally the stocks that we review in Stocks in Real Life, and I think I'm saying this out loud because I think we should do this more in shows moving forward. I would love to, not financial advice, but like try to craft a trade idea around the underlying stock on one of our strategies. Normally that's going to be the trend spread or the wheel if we're playing all these different underlyings, but it's not even on the watch list right now. You can't find for it. You can't trade for it
because it's not paying enough premium.
Right. It's just not paying enough. It's not finding its way onto the trend spread watch list, probably paying under a $10 premium for a 7 DTE contract.
Yeah.
Probably not.
If I had to trade Ford right now, I would probably do like a leap and sell calls against it. Like a leap I'd probably buy the $11 strike and then sell the 11.50.
All right. But do you guys agree? I think we could moving forward come up with some stocks that we feel good about at least, and maybe form a trade idea for these beautiful listeners. And of course Doug, although he hates Ford.
Let's say we did a year here. All right, I would buy the $12, I think, then.
It's funny to see such a short list of strikes available.
Yeah, you know what? This isn't a bad idea, I think. So we bought that, and then let's go back to if we did weekly contracts. So I'm buying there's the 85.
Oh, that's silly.
Yeah. So if I bought the 10 there, I can sell that. I can sell the 10.50, make about 9 cents, 8 cents. And if you do that, you make back the price of your put in the span of, call it 12 to 14 weeks by doing this. And then just straight money from there.
All right, do it then.
Nah.
All right. Mark, I guess while you were trading a lot more heavily back in the day, does Ford come across the desk at all, or anybody's desk at that time while you were in the thick of it, or not so much? Just too cheap, not much.
Not so much. I never remember this being a particularly active stock. I mean, I don't think the average daily volume is anything too significant. And the low dollar price makes it a little like clunky to implement like strategies from like a retail perspective, just given the strike funkiness. So never, then thus, even from the market maker side, like there just wasn't the activity and the speculative activity that, was good.
So when I was thinking about this, I was pulling up other car stocks, at least, traded here in the U.S. markets. What are some other ones that come to mind? I've traded GM. I know General Motors has come into my portfolio. That's trading around $50 a share right now. Obviously, I don't do much trading on Tesla because I don't have the capacity or dollar monetize or brain capacity to trade that stock. Do you guys trade any other car manufacturers? The Rivian's out there, which we've talked about. Lucid Lucid's too cheap now at this point. Anything else in the car manufacturing space that we want to talk about before moving off of Ford?
I mean, it'd be hard not to talk about Tesla, but I'm not sure that fits in the car manufacturer standard bucket, nor does Rivian in some ways. They're a little bit more tech companies and everything. That's funny. And I actually agree with Doug's former point about 8 cents on the 35 Delta. That's the exact reason why it's like really hard to trade something like this. 30 Delta tends to be my go-to like overwrite level that that's a real benchmark 25-30 that I'm looking at for pricing. And if you're only collecting 8 American cents on this, it's like, forget about that. Like that's just not worth, you're slipping a penny or two and that's 25% of your collection. So between that and just the low dollar nominal amount on this, it's just not that attractive for implementing, standard buy-side strategies.
Yep.
Couldn't agree more.
Totally agree. Cool.
Yeah, if that's the case, let's get right into the meat and potatoes of the show. Let's get into the fun stuff. Ford, this was nice having you, but we're going to kick you. Let's get into it, guys. Let's talk about one of our newest strategies, but more specifically, our newest segment. Ben, I'll have you take over here.
Cool. So if you've been tuning in for the last several months, you'll know that we typically do a learning segment where we'll pick a topic, we'll talk about it. Mark will talk us through that topic, dive in. We're going to change that up a little bit, and we're going to actually talk about our strategies, and specifically the strategies and bots that Mark is using for his clients. So PeakBot's bots, Mark and his business, his clients are using PeakBot's bots. So if you are interested in bots, you think bots are a great trading tool, but you don't want to manage them yourselves, or you don't want to select the tickers, Mark's here to do that for you. You've got the link scrolling at the bottom of the screen, peakbot.com/harvested. And today we are going to start the process of breaking down the King Condor strategy. And this segment is called the Bot Shop. So we will spend several weeks on the King Condor strategy. We'll talk about all the different facets of the strategy and what would be different if we changed some of those settings. Our team spends hours and hours and hours researching, testing, trying different parameters, seeing what the best fit for current market conditions are. And we ultimately land on something that makes it out to production, which is where everybody else can see and trade with that bot. So the King Condor, we're going to take a look at the base strategy, and we've got a back test since daily expirations were available. So we'll pull that up. Today, we're going to analyze the time of day impact. So we'll take a look at when the King Condor enters, and then take a look at how the time of day can impact results. And then we'll conclude on what we believe the best time of day to enter is. So to start off, this is our base. This is our base strategy. I'll zoom in over here.
I'm going to kick our faces off for a second so people can see what we're... Oh.
All good there, all good. So if we briefly cover these statistics at the top here. So we've got P&L of $25,000. Starting capital is $10,000. We end with $35,000 over this backtest period. The backtest period starts May 16th, 2022. Why May 16th, 2022? And that's almost 3 years to the date. That's the day that daily expirations became available on SPX. So this is a 1DT strategy. Could we go back and backtest further when just the Monday, Wednesday, Friday expirations were available? Sure. And maybe we will. But for now, we're just doing the dailies, trading this strategy every day. It's not day trading, although we are trading it every day. We're trading 1 day till expiration. A compound annual growth rate of 53%, max drawdown. And this is assuming one contract on $10,000. Max drawdown was only 7%. Win percent of roughly 78%, and that's on a per leg basis. When you combine the legs, which we'll get into the details of that on another show, but when you combine the legs, it's about a 56% win rate. But the wins are going to be greater than the losses. And again, this is just the way that our backtest software kind of spits out the data. When we win, again, this is per leg, so we got to double this. We got to say 154 plus 154. Our average win is just about a little over $300, $308. The average loser, again, this is per leg, so we have to take this number, subtract it from the win, because one leg is going to win and one leg is going to lose in the case of a losing Iron Condor. And that's what we're going to experience today when the market opens on the King Condor, because we moved 3% over the weekend. So we have to subtract this win from the average, or we have to subtract the average win from the average loss. So that puts our average loss at right around $210-ish. So average win is about 310, average loss is about 210, and we've got about a 56% win rate, which is why we see such a nice looking curve over time. So that's the base of the strategy. Now, as I mentioned today, we're going to talk about the time of day impact. So we've got the opportunity for morning entries, midday entries, and afternoon entries. For the King Condor, we are running this on afternoon entries. But Mark, I will let you kind of give some background into why the time of day of entry matters.
For sure. And I think, taking just a quick step back first, like this is one of the most important and probably my favorite aspects of the King Condor is that it's sensitive to what is going on in the market. It is looking at how the day is evolving. It's looking at how various indicators, whether they're volatility or underlying or intraday, overnight moves, and it's making its decision based on the immediate context, which is absolutely what any option selling strategy needs to do. It needs to be aware of, is this a good time for me to enter into a trade? And the time of day is one of those really important factors because we see a lot of ebb and flow in terms of volume throughout the day, but there are some pretty consistent patterns that emerge. And that generally when we look at the profile of options, and this is actually true for equities also, equities obviously options follow a little bit what's going on in the equity market, but we typically see what's called sort of a saddle curve of volume, where if we were to plot the time of day on the x-axis and the volume per, the time on the y-axis, we'd see a ton of volume at the beginning of the day, slow down when everyone's going to get their burrito for lunch, and then a spike at the end of the day at the close. So whether it's a strategy that is trading, marking on the close or marking on the open, those two kind of points in the day, if I could call it the most important hour of the day, it's from 9:30 to 10 and it's from 3:30 to 4. And those two windows are when we see the most liquidity, the most volume, and as a result, the most price discovery. So if you're thinking about a trading strategy, trading at a time when you see that kind of activity, or gleaning information about the price action from those times of intense activity is a really valuable indicator when setting up a strategy. So if we're breaking that down, we've got our morning entries. We're looking at what happens in the first 30 minutes of the day. And, we're not alone here. There are plenty of strategies that rely on this general opening market setup, that those first 30 minutes when overnight orders from international are coming in, people are still trading the, London markets and potentially even hanging over from the Asian markets. So like that early morning time, there's a ton of kind of latent interest that gets priced very quickly. It's, from a modeling perspective, as you can see here, it's got the highest premium. Naturally, if you trade at the beginning of the day, that's going to have more premium than if you trade midday or afternoon. Theta curve doesn't decay totally linearly. So as we'll see in some of the other ones, there are some benefits to letting a little of that theta bleed and then trading later once you kind of have more information, more, context about what's going on in the day. Another advantage of trading early is you have the full trading a day to adjust and manage this position. The obvious flip side of that is, especially if you're trading relatively short time frames, trading at the beginning of the day to expire the next day gives you almost double the exposure as if you were to trade at the end of the day. So having more exposure, especially on a market today, like where we're gapping early, is adding more risk and isn't always a benefit. So that premium is coming from somewhere. So the morning, while it does provide a lot of pricing, obviously gives you, longer exposure time. Midday, we're calling that the 11 to 1 p.m. range. I see a lot of pros and cons about trading here too. As I mentioned, this is kind of the nadir of that volume curve. So you're generally going to see lower liquidity. You're going to see less action. Spreads, well, they might not necessarily be wider. They might be a little bit more skittish. And particularly if you're trying to trade bigger size, that has the potential to move the market a little bit more. So lower liquidity in the midday. By this time you've seen where the market's going, so everyone else is kind of balancing that too. Some theta is going to have decayed, but again, less time on the clock, a little bit lower liquidity, but you kind of have the benefit of seeing the morning and not waiting for that whole day's theta to drip out. Finally, the afternoon entry, which is where King Condor is focused on mostly now, is this 2 to 3:30 p.m. window where we've seen the majority of the day. We've seen 2/3 of the day pass. There's only a narrow window before this current expiration. So you have a lot of time to digest that, but spreads are going to be a little bit cheaper. And in some ways, you're adding a greater component of overnight risk to that trade. So if you're trading at 9 a.m., you have the day and the night and the next day. Whereas if you're trading it in the evening, a lot of that overnight risk is a bigger part of your overall position. So, a lot of pros and cons of all these different strategies. And I think it really depends on what you see happening in the market, whether it's advantageous to get in early because this is the kind of breakout that you might see, or you let the market digest kind of the news, the repricing that's happened, and you get in towards the end of the day. So again, think about what kind of strategy you're trading, and understand the different liquidity at these various times of the market open.
Yep. Perfect. And we've seen the time of day for the entry impact strategies tremendously, and we'll go over the impact of trading at different times of the day for the King Condor. Before we get there, Mark, do you want to take this question?
Quick question, and this is not regulatory advice, but if you buy an option and you let it expire that day, I don't believe that will count as a day trade. So if you have, particularly SPX is nice with a cash settlement, you can trade that and it'll settle, and that's not a day trade. To the extent that you were going to close it out, you buy a call spread in the morning and then you look to cash it out and take profit or whatnot. If you open and close the same option on the same day, that definitely will count as a day trade. So if it expires, no. If you close it out, yes.
And I believe if you enter into a contract or a spread and it is in the money at expiration, well, if it's a 0DT contract that you get in and it expires in the money and you're technically transacting on that contract, I believe that's a day trade as well. Don't quote me on that. But
expire worthless is when it doesn't really count.
If it expires worthless, there's no further action taken on it. If it expires in the money and there is a transaction, I think there's potential for a day trade there.
Confirm with your broker.
Yeah.
That's a good question. So an exercise or an assignment counts as a trade?
Yes. That from the very confused representative I talked to at one of our partner brokers, that was the answer that I got back. So we're gonna have to ask Matt Cashman about that.
Yeah, we'll bring Matt back on the show. He'll have an official answer on that. But it is important. We build that into the structure of our different strategies, right? I mean, taking into consideration, not trying to break the pattern day trading rule, making sure that only X amount of trades are made in the week, blah, blah, blah. But yeah, expiring worthless. For our knowledge today, right now, not a day trade. Okay, sorry.
So let's take a look at some comparisons here. So, like we said, King Condor does enter in the afternoon. Now, this is the base data that we talked about. Here's what, and the only thing that I've changed in this strategy is the time of entry. So for this test, I set up the bot to only enter at 10 a.m. versus 3:15 p.m., which is what the King Condor does. Now, the P&L drops dramatically. Again, we were looking at a 25K profit from the previous strategy. As a result, the CAGR decreases. Max drawdown increases quite a bit. And we can talk about why we think that might be.
Hey, Ben.
Decreases. Yeah.
I'm the worst, but I think for the people out there, if we're going to be doing a lot of this back-tested stuff, CAGR, however you want to say it, can you give a high-level definition of what that represents?
It's compound annual growth rate. So what is your annual rate of return based on your starting capital and how much you've made every year?
Okay. Appreciate it. I just want to make sure
at a high level. Yep. So let's talk about this for a second. Why do we think that trading earlier in the day is going to lose us more trades? We saw the win percentage drop from about 78% to 71.6%. We saw the P&L drop about $15,000. Dillon, you got your hand up.
Yes. My layman answer is going to be exposure, right? I mean, you're simply more exposed. There's more time for things to go, of course, go your way, but more time for things to not go your way. That's the high level answer, and I don't want to get more into it, but that's my reasoning.
Yeah, Mark mentioned that, you're going to earn more premium. You're going to earn more credit earlier on in the day, and you kind of see that the average winner is higher than the average winner of the end of day trade. So what was it? It's $161 per leg there and $154 at the end of day. So it really doesn't make that much of a difference, but there definitely is a difference. And I would say just the time exposure of market movements intraday is what's causing this graph to be so choppy, whereas the other one's a little bit smoother.
Yeah, a lot more smooth.
Yep, and that's likely what's leading to the other these bigger drawdowns that we see on this chart here. It's definitely not a curve that I'm as comfortable with. Now, what is interesting is we got a total of 656 trades on the morning open, and then we got more trades on the afternoon open. Now, that's not because of that's not going to be impacted directly by the time of day of the entry, but rather the other parameters that we're using for that strategy. For example, when this bot is looking to enter, it'll check the price of VIX, right? And if VIX falls with or within a certain range, it'll trade. If it's out of that range, it won't trade. So that's telling me that in the morning, there were more times that VIX was out of that range than in that range. And we actually wound up getting about 22 less trades because of that. And it seems like those 22 trades really helped the curve.
100%.
So morning entry seems like a no-go. If we change this to midday entry, so I'd change this back test to enter at 12 p.m. Instead of 10 a.m. Results improve slightly. So I'll zoom in here. P&L bumps up to almost 11,000. CAGR is just a bit higher. Drawdown is just a bit lower, so slightly improved, right? We see the average winner drop even further, but we still have that longer exposure throughout the course of the day. And especially because considering the market that we've been trading in, I kind of want to get as close to that ending bell, closing bell as possible. What are you guys' thoughts on like a 12 p.m. entry? And we have a 12 p.m. entry for our regular iron condor strategy. But what are some thoughts?
Mark, you like that midday entry at all? I mean, we talked briefly about it. There's pros and cons to it. You know, when you're trading condor, how do you feel about that midday?
I think I tend to be biased towards midday and afternoon rather than morning necessarily. I think if you're trading a zero DT strategy, you want to be in the morning. I don't think you want to be in at the 9:31 bell because there is some choppiness right there. But I think pretty quickly, once you see what settles down in the first 15 or 30 minutes, intraday, without a doubt, I think you want to be in early. The longer your horizon goes, the closer or the more inclined I am to trade towards the settlement price on that given day. So pushing it later in the afternoon towards the end of the day close. Midday makes me nervous. I'm thinking maybe more institutional size. There's less liquidity. So from a retail perspective, it might not, hit you. But midday, we often see thin moves to the extent that there are buy-side programs that are VWAPing and trading. Like a lot of those will kind of kick off or end around that time. So I think we tend to see extremes in price action at the midday, which makes me less inclined to want to settle on a strike-specific strategy then. So my bias is going to be actually, I think, towards the afternoon.
And that equity curve speaks to it right there. I mean, that is high and tight right there.
Yeah, I mean, the midday curve looks a little smoother than the morning curve, right? So we can see as we're moving on throughout the day, ultimately getting to the late afternoon entry that we do have built in, the curve smooths itself out. So pretty cool to see that. We got a question from Doug. How does the back test compare to having bought the underlying? So this is an SPX only strategy. So technically you can't buy it, but you could buy equivalents.
So I did some rough math since we're going back to March 2022. So we've got 3 years. S&P or SPY is roughly at like 581 today. It was roughly at like 399 there. So we've got like a 45% return in the gross. So over 3 years, CAGR that at, I don't know, 13%, something like that, 12%. So I think it's important to compare it on both the absolute return dimensions, but also the drawdown percentage, because I think that's a huge advantage of this King Condor, is that max drawdown is only, what do we have, Ben? It's 8.7?
6.7.
Sorry.
Yep.
6.7 drawdown. I mean, compared to what you see in SPY, just this past month, we've seen a bigger drawdown than that. So that's a really important component of it. And I think it's worth contextualizing that drawdown compared to the contract size and the portfolio allocated to this. So if we have a $10,000 portfolio allocated here, we're only doing one contract. So realistically, your like margin usage is only about 10% of your capital. Heck, you could throw 90% of this in T-bills and put a tailwind to 4% on this whole strategy too, because it actually really is using only a relatively small percentage of the portfolio, which brings that drawdown number down, yet still delivers a CAGR that's significantly above what we'd see in SPY.
Yeah, no, that's a great point. And actually, a really interesting thought there, Mark, where you could just throw the excess cash into T-bills and feel pretty secure about that. Are you going to do that for your clients?
I'm already doing it for my clients. That's the advantage of coming over to an advisor, is that while we've got I'm roughly about 10% deployed in the King Condor in the client accounts, and the balance that isn't allocated to other strategies or in some unique thing is right in a T-bill product. It's not bills directly, but it's an ETF that pays monthly distributions of short-term bill rates.
You guys got to sign up. If you're interested in all this, but you don't want to be the one bringing the ball up the court and missing, let Mark handle that. Get a professionally managed portfolio, peakbot.com/harvested. How do we put a bow on this, fellas?
One other thing, we're forgetting dividends. SPY actually does pay dividends, so you probably have another couple points on your total return. I just did the naive price action, but you've probably got $10 in SPY dividends over that period. No, more than that. 18 or $20 in SPY dividends over that period.
Very cool.
Nice. So that'll bump up the return by 5-ish%.
Yeah.
On average. Cool. All right. So I think we can conclude that time of day, the later afternoon entry for this 1 DTE Iron Condor definitely proves itself to be the most advantageous for us, which again is why we built that into the bot. So if you're trading this strategy and you're thinking, why don't we enter earlier in the day? Well, this is why. Take a look at the data. It's really just more beneficial to enter later in the day.
Yeah, I would kind of summarize that by the price you pay in theta in terms of the lower premiums you collect are worth less than the directional clarity you get and price clarity you get by trading at the end of the day.
Yeah. And to note, and I'm going to share my screen quickly. We are starting to track the results of this in our own Discord here. All right, so I'm just going to show quickly. I think the bot is 3 of its last 4. I'm counting the likeliness that today's King Condor gets blown out. But as we can see here, I just wanted to share. So the King Condor, and it's not going to trade every day, as we mentioned. If there is too much movement in the underlying NSPX or the VIX is too high, it's not going to trade. But we took home $379 on the contract expiring 5/2. So that was a win. On the contract expiring 5/5, that 1 DTE trade, which was the next to enter, was a $323 gain. This is a max strategy win. And then the most recent one was expiring 5/9, another win. So it's been 3 for its last 3. Likely going to get blown out today. Are we anticipating an entry end of day today for tomorrow?
Nope.
Or I guess it really just depends on.
We're not anticipating entry because we've got CPI data coming out tomorrow morning, and there's very few economic events this bot will turn off for. FOMC is one of them, of course. But in our backtest data, this bot has never won when CPI data is released. So.
Yeah. So you don't have to worry about that, the retail trader. You don't have to worry about that. It's all being taken care of and programmed into our automated algo here. And that's all it needs to do. If it can win just a little bit more than it loses, this is a very profitable strategy. The PeakBot users are used to like these, we're grabbing delta between the 25 and the 30. So we see like that 70 to 75% win rate. This bot, and we'll get into this on further shows, but you guys could see it there. The win rate's lower. It's what it been 52, 56. I think it's 56% average win rate. And that's all you need if you're going to win every 2-to-1 trade. So, yeah, fantastic strategy. What are we going to talk about next week on King Condor? Where are we breaking it down next? Do we not know yet? That's okay.
Yeah, I don't know. Probably the spread width.
Okay. Gotcha.
What deltas we're trading. Maybe we'll talk about delta. We'll see. We've got probably a solid 6 to 8 weeks of different parameters that we're going to be able to talk through.
And we'll be tracking results live the whole time.
Yeah.
So fantastic. Any other thoughts on King Condor, the bot shop, anything else before we get going here?
Let's get out of here.
All right. So just the plugs. Okay. Shameless plugs. If you're interested in a professionally managed portfolio with PeakBot strategies and the professional management of Mark and Harvested Financial, just head on over peakbot.com/harvested. Get some access to King Condor handled by the pros. We do need to just mention quickly, I'll throw this on screen and I'll get rid of our banner. PeakBot exclusively with Tradier is offering 6 free months of PeakBot. This is if you want to be in control. All right. If you don't want Mark handling this for you, which you should, but if you wanted to be in the driver's seat, 6 months free, PeakBot Pro and commission-free options trading with Tradier Pro. You can go ahead and grab the QR code right here or head on over to peakbot.com/Tradier. Free 6 months of automated trading. So all you need is a new Tradier account with $5,000 in it, and you'll be ready to rock and roll. So guys, thank you so much for another fantastic show. We had over 750 tune in here live this morning. So thank you to all of you. Hope you all have a fantastic week. We will be live here again on Friday, just shy of noon Eastern, for the automation station, which will take a deeper dive into PeakBot's automated picks for the week and much more. You said CPI data tomorrow, Ben. Anything else to look out for? We didn't do economic events. Is there no FOMC or anything this week? I'm just,
Let me take a look.
I feel like we normally just.
I'm just going to briefly squeeze through. So yeah, CPI tomorrow. Wednesday, we've got some Fed speeches, but nothing major. We got PPI on Thursday, and we have that pesky Michigan consumer sentiment report on Friday.
Ugh, hate that report. One day we'll love it. One day it'll go in our favor, but right now, still salty.
Yeah,
all right, guys. Well, thank you for tuning in, and we'll see you again, same time, same place next week. And as always, we'll see you at the peak.
Happy trading, Doug.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.